Thank you. Hi everyone, I'm Yasuo Kono from Nikko Asset Management. And before start this session, we did the survey where to invest earlier, and I realized only 2% of you chose Japan. So a little shocking, but that's okay for now. That's why I'm here, and I will provide what's the local insights on Japan equity market and why we should invest in Japan now. And let me quickly introduce what's the Nikko Asset Management, my company. So Nikko is one of the oldest and largest asset management company in Japan. And we are partnering Aham Capital Asset Management in Malaysia here. So that's the reason why I could have this session. So Japan, Nikko Asset Management, finally changed the outlook for Japan equity market 2 years ago. Finally. And we were right. Japan equity market started to improve since then. And then we are still constructive on Japan equity market outlook because Japan is finally getting out of the lost decade and the country is still in the early stage of the exit from the lost decade. So I'm giving you the two structural reasons here. Okay, so the wage growth acceleration. In Japan, the wage growth has been starting accelerating for the first time in 30 years. That's because more Japanese workers are now looking for job changes. So you may know Japanese workers traditionally continue to work for the same employer until the retirement. So that's called life employment. But now more people started thinking about what if we change the company and get a better pay. That's a very big change for the Japanese culture. And that's the driving force why we are seeing wage growth acceleration, because there is a shortage of labor on the ground. For the company, it is not easy to replace the position if their employee leave the company. So instead, the company raising the wages to retain the good talent. So that's the reason why we are seeing finally the wage growth acceleration. So wage growth usually drives the household income and ultimately the consumption. So that is how GDP is growing and where we want to invest now. And second driver for the equity market, that is the corporate governance improvement. So as you may know, the Tokyo Stock Exchange started to put the pressure on the listed company to improve how to use their capital. Because traditionally, Japanese companies have low awareness to improve the capital profitability. So how to improve that is the shareholder return for dividend hike or share buybacks. So what we are looking at here is the dividend increase and also the share buybacks. Both are increasing now. And we continue to believe more companies increase their dividends because 90% of the listed company in the prime market, so that's a key market in Japan, they already announced what's the metric, how to increase the dividend. So that means company will continue to increase the dividends as long as their earnings continue to grow. For this year, almost 10% earnings growth is expected. So we will likely see the more dividend hike in the future. Okay, so how possible to further increase the dividend and share buyback is here. 61% of the listed companies have net cash in Japan. So that means companies have more cash than debt. So this is the great funding source to improve their shareholder return because they have the cash on their balance sheet. So in the last 30 years, there is no or low growth environment in Japan. So that means the company did not have many investment opportunities to use their cash. So they just accumulated the cash on their balance sheet. But now they are under the pressure from the Tokyo Stock Exchange. So they started seriously thinking about how to use their cash. And one of the directions to go is dividend hike and the share buybacks. So that's the key driver behind this. So how these two structural drivers improving the market outlook? So I will introduce the 4 types of investment opportunities. So this is where our portfolio manager currently looking at. The first one is the price hike in the consumer market. So wage growth acceleration drive improving the purchasing power of household. So that's driving the price hike, allowing the price hike in Japan. And as you see, most of the category, with some exception, have seen the price hike so far. And more importantly, on the left, household durable goods, so this is the discretionary goods, seeing the higher price hike now. So price hike is a very important driver for the company's profitability because price increase directly improve the profit margin and then ultimately support the share price. And other categories like dining out, that's also the discretionary and also the clothing too. For these discretionary goods, will likely outpace the growth of the necessity goods and services. So we can select which one we want to invest, and currently discretionary goods is one of the key parts to invest. Okay. The second investment opportunity to illustrate here is other price hike, but it is in the corporate sector for IT service industry. So IT service industry is a beneficiary of the digitalization, of course. But in Japan, there is a shortage of labor. So companies need to invest in the more technology because they need to maintain the business or need to grow the business. So instead of the hiring more people, they are using the more technology now. And also, again, the Tokyo Stock Exchange pressure for how to use their unnecessary cash on the balance sheet. This is one of the areas to invest for the company. So they are increasing the investment for what is the CapEx and software too. And as a result, what we are seeing is a price hike in this segment too. So the line chart shows the revenue per computer engineer in Japan. So as you can see, that continues to increase because demand is increasing. So company can raise the prices for their computer works. So that's the one of the area. And other price hike example is here, the construction industry. But it is not driven by demand growth, but supply shortage in this area. So you can see the construction worker has been decreasing because of the aging population in Japan. Demand is almost flat, but supply is decreasing. That's the reason why we are seeing the price hike for the construction work. So nobody wants to join this industry because work is hard and pay is comparatively low. So company is now accepting, so clients is now accepting the price hike, no other way to ask. And fourth opportunity, so this is the last one, last opportunity I share is the rate hike beneficiary. So Japan is not exception. So banking sector is a key beneficiary of the rate hike. And Bank of Japan will continue to increase the interest rates. And banking sector, the share prices is now expected to increase further. So I introduced the 4 investment opportunity. And the key is all of these 4 industries are domestic demand oriented, not exporting or not global companies. So because again, Japan is now being revitalized. For we should focus on the domestic demand. For these are all the domestic demand-oriented industry we want to invest. And other tips, how to invest Japan, and this is also very crucial. Japan, there are many stocks, including the small and mid cap. And there is some unique aspect. For there is a lack of the sell-side research coverages, especially in the small and mid cap space. Because Japan has the many small and mid cap. So you see the green piece of the bar, for no analyst covering. And we, the Nikko Asset Management, and of course we are Japanese asset management company, so we have around 30 portfolio manager and research analysts on the ground, so that is our in-house local research capability. So they also cover the small and mid cap. So this is the area potentially undervalued opportunity there because of the lack of the sell-side research coverage. And we, as an asset management company, focus on this area to provide a better investment opportunity for our clients. Okay, checking the valuation. So currently, the price to earnings ratio in Japan is slightly above the historical average since 2010. But it is important to note that the last 15 years had a low growth environment in Japan. So that means driving down the valuation in the last 15 years. So now, Japan is getting out of the lost decade, that should improve the valuation in the future. So as a reference point, 2003 to 2007, when Japan had some growth, it is mainly the cyclical growth rather than the structural growth, but it is a good reference point. For price to earnings ratio was much higher at that time. So this is why we believe there is a room to improve the valuation in the future because Japan will be different from the last 15 years and finally getting out of the lost decades. Okay, before closing, let me introduce how the Nikko Asset Management invests in Japan equity. For structural tailwind and cyclical drivers, we capture both of these opportunities for structural opportunity and also the cyclical opportunity. For Japan is such a matured economy. Many industry and companies may struggle to turn around or suffering and losing the positioning in their market because of the dynamics of the demand, population, competition with other countries. So we carefully select the best stocks, which is expected to improve their business. There are many examples there. So this is where we want to focus to invest. And cyclicality is also important to invest, especially in Japan, because Japan has many manufacturers. So manufacturing industry usually have cyclicality. So again, the local research is important because of this too. So we focus on which sector will turn around, and currently, for example, some segment of electronic sector and machinery. So that is where we currently are somewhat overweight or are focused to invest. So let me show the example of the stock. The left one, this is the large-scale company in Japan, so Sumitomo Mitsui Financial Group. So again, this is one of the three largest banks in Japan, so the key beneficiary of the rate hike. And besides, they are very actively improving their shareholder return. As you can see, the dividend, share buybacks, and also the sales of the cross shareholdings, that account for almost 10% of their market cap. So that's a significant number to invest to gain the return. And cross shareholding, this is also very traditional in Japan. Sorry, a lot of the uniqueness in Japan, so I need to explain that. For large-scale company in Japan, hold the stakes in other large-scale company within the same group. So that's a tradition. But now, Tokyo Stock Exchange asking the company to effectively use the capital, so they started to sell these cross-share holdings. That will be the additional funding source for the dividend hike in the future. So this is also one of the key drivers for this stock, and many other large-scale companies too. And right one, the Kumagai-gumi, I think this is very unfamiliar name. And this is one of the construction company in Japan, and this is the mid-cap stock. So could be the under-researched and undervalued opportunity here. And we like this stock because, as you can see, the line improving. So this is the profit margin. So this is also the one with the company increasing the prices, and then profitability is improving and the share price is doing well. There are many other companies illustrating the investment opportunity, as I mentioned earlier. These are all domestic demand-oriented companies, and this is also important to protect your portfolio because domestic demand is relatively immune against JPY volatility and also Trump 2.0. Okay, so to wrap up, this is the summary, but the key is Japan is still in the early stage of the exit from the lost decade. So this is the key. And we, the Nikko Asset Management, for local research capability is important. We really recognize it. And there is a lot of the potentially undervalued opportunity in Japan because of the under-researched opportunity and also cyclical growth and also the structural recovery that's all happening on the ground. So we put the effort on this space, and we hope continue to offer the best of investment opportunity for you together with our partner, the Aham Capital Asset Management. Thank you.